Hi, everybody. This is Lance from DayTraders.com. Just wanted to make this video more of a vlog type post. I'm not going to be showing any charts or strategies yet. Um, Wanted to just talk about my thoughts about this Volmageddon, as so to speak, where volatility increased very dramatically on Friday and on Monday. So I did take a fairly significant hit on my account, just like a lot of other option sellers, especially on the futures. Currently down about 11% from my initial account in the beginning of the year. And it was a bigger drawdown from the all-time high. So I'm not going to lie about it. It was very difficult, and it was difficult for other members. A few things that I am looking into, and this will come up in future videos, are making the 112 into a 1122 safeguard trade will be a defined risk trade. So I'm going to be looking into still the 1-1 buy 50 width, and I'm also fiddling around with different widths. Maybe make a 300 width on the 1-1 part. But then the 2-2, I'm going to look to make two credit spreads instead of two naked puts. One of the big things that hurt on Monday, especially, were having just two naked puts, and the bid-ask spread was so high that it was hard to get out at the normal 3x stop that I normally do. Also, with that defined risk, I'm going to be looking into going to make sure that my 3x stop is no more than 2% of my net lick. I was going at 3% of it, and a few of them did stop out. So looking into going in a lower amount of my net lick loss whenever it does stop out on it. I'm also looking into different amounts of buying power to use depending on the VIX. So when the VIX was lower, like it was about a month ago, I'm going to be using even less buying power. So then at least you could offset the buying power expansion when the VIX shot up to 60. Don't know the exact numbers yet on it. I might go close to what Tasty Trade had recommended. And I'm also looking at different Black Swan heads type trades. Looking at two different possibilities, and I'll do these in future videos. One is to start it off with a debit, just have a lot of bought puts, quite a few less sold puts. So it'll be a ratio based on that. And then continue to build up more of the bought puts over sold puts. Because when volatility increased so much, that's what allowed a lot of those bought puts to be worth a lot more, even though they weren't in the money yet. With the increasing volatility, it definitely helped out in those bought positions. But you got to be very careful of that as well. Because of the bid-ask spread, it could easily make things go haywire and not necessarily help you. Also, if you end up buying a lot of puts really far out of the money compared to sold puts, it will give you more buying power, which could be tempting to use for other your main option selling trades. But then you would be taking on more risk anyway, which defeats the purpose in a big volatility event. So I'm looking into all these different factors, probably calculating the buying power use of a Black Swan heads type trade, and then making sure I don't use that buying power for additional trades, because then I could be over leveraged. A few general thoughts on psychology and trading. I saw a lot of members in my group. Some of them were doing okay. They had slight drawdowns, and drawdowns are bound to happen, but some had very dramatic drawdowns. They were over allocated at the time, even though I did give a lot of warnings that we should stay low on buying power, take off some risk. A lot of them didn't necessarily do that, and they were having a lot of trouble in their accounts. I saw two main types of people, and I was in a Zoom meeting for over an hour and a half, so I saw both ends of the spectrum, especially in pre-market on Monday. One end of the spectrum was, so people were very active and eager to manage the position at the time. A lot of people were at over 100% buying power. I even was at one point, and then just looking for ways to mitigate that. Second group of people were ones that were kind of like a turtle in their shell, and they were just shell shocked. They saw how down they were at the time, and they decided to do nothing and hope that it would recover. I think at the moment when volatility was in the 60s, it makes sense to try to manage it at that point. Some of them were beyond a 3x stop. It could have gotten a lot worse if volatility stayed there or went up. or if we hit a circuit breaker and the market dropped, over 5%. I think it's around 7%, the circuit breaker. At that point, it would have been even more dramatic of a loss and you could have blown out your account completely. So I think in those situations, you can't just hope for the recovery. You actually have to take action and close out the positions the best you can. Even though hindsight is 2020 and the market did recover a bit afterwards, you don't necessarily know that. So one of the keys doing well in long terms is making sure you can mitigate your risk. And one way to do that is to actually make sure that you see what situation you're in and how to deal with it. If anyone has any questions or needs help on any of their positions, if you're a member or not even a member, feel free to leave a comment down below. You could also send me an email. I'll leave my email address in the description down below, and I'll see if I can help you out. Yeah, I'm not going to try to get you into my service or anything like that. Just as another set of eyes to help you if you are in a pretty tough situation right now. Feel free to send me an email and I'll see how I can help. Again, this is Lance from datatraders.com. Hopefully you guys are doing well out there. Market will possibly recover and do well, although we don't necessarily know that. So hope everyone is doing well with their accounts, and also make sure that your health and looking at other things besides just your trading account, your family, your health, your friends, all those things are very important as well. Trading is not the end of the world. Again, feel free to leave a comment down below or send me an email, and there will be future videos looking in more detail of what I just talked about. So stay tuned and see you on the next one.